in response to American vessels being struck in the Strait of Hormuz. US President Donald Trump described the exchange of fire as a love tap, asserting that he does not view it as a renewed war, while Tehran characterized the flare-up as an act of aggression, although it confirmed that the situation in coastal waters has since normalized. So far, the attacks have not escalated into further conflict. However, oil prices reacted with continued gains while the US stock indices slid. This environment has weakened demand for risky assets in the currency market, resulting in further declines for both the euro and the pound. Additionally, a Chinese-owned oil products tanker was attacked near the Strait of Hormuz while being escorted by US ships as it attempted to pass through the strait. This incident could provoke outrage from China, but the Chinese government has not yet issued a response. Now let's take a look at today's macroeconomic calendar, which is filled with important news releases. It includes data on industrial production in the trade balance from Germany. Since these reports reflect March performance, market participants will likely shift their focus to speeches by European Central Bank President Christine Lagarde and Bank of England Governor Andrew Bailey. Traders will be looking for insights regarding their economic outlook and future interest rates paths. The UK is set to release its house price index today. Later in the day, all eyes will be on US jobs data for April. Following a surge of 178,000 in March, US non-farm payrolls are estimated to have increased by only 65,000 in April. If the actual reading exceeds expectation, the dollar could strengthen further, reinforcing arguments for tighter monetary policy. Notably, the Fed's Susan Collins stated yesterday that this supports the central bank's overall position in avoiding the phrase easier monetary policy in light of rising inflation in the US. If today's jobs data turns out to be relatively strong, it could provide grounds for the Fed to maintain its current policy stance, which in turn may bolster the dollar while putting pressure on the euro and the British pound. The US unemployment rate is projected to remain unchanged. Additionally, traders may pay attention to the University of Michigan's measures of consumer sentiment and inflation expectations. Significant deviations from economists' focus in these figures could lead to spikes in market volatility, with better-than-expected statistics potentially triggering renewed dollar buying activity. Turning to technical analysis, 1-hour EUR USD chart indicates that the false breakout at 17.26 would create a buy signal, pushing the euro up to 17.54, where selling pressure is likely to emerge. A break in consolidation above this level could pave the way for a move towards 17.78, with the potential for further gains up to 17.96. At this level, I would recommend considering short positions on the rebound, targeting an intraday correction of 15-20 pips. Sell entries at 17.78 at 17.54 should be placed only following a false breakout. The target of bears would be 17.26. In case of downbeat data from the euro area, a break and hold below this level would add the pressure on the European currency, potentially driving it down to 17.01 and possibly opening the door to 1.1678. At this level, it would be wise to consider long positions on the rebound, aiming for a move of 20-25 pips. Long entries at 17.01 and 17.26 would be relevant only after a false breakout. Regarding the British currency, the trading setup is similar. Sterling may enter an upward correction in early trading, so it would be prudent to consider short positions on the false breakouts at 35.80 and 36.11. Sell entries on the rebound could also be viable at 36.41, targeting a move of 25-30 pips. Buying opportunities could present themselves on false breakouts at 35.47 and 35.14. Going long on a rebound would be appropriate at 34.81, aiming for an intraday correction of 25-30 pips. Good luck to everyone and have a great weekend.